Hi guys, this is Hector. Today is Thursday, the 18th of October 2007. It's 2 minutes past 9 a.m. London time. I am short on the Swissy. That means the American dollar against the Swiss franc, of course. You are right now seeing the daily chart, okay? That's my entry level right there. Right now you are seeing the daily chart. This is a setup that I've been following for a long time, and well, actually I took a short entry last week, which didn't quite pan out very nicely. In fact, I scored a loss, but I was telling the guys that on my mailing list that I believe that this setup still has some potential. Okay, upon having breakout, having broken this triple low here, okay, the 119 level, then we had the breakout here. Then we've retested from below, and from there it seems like we are beginning to bounce to the downside, and that's why I was searching for short entries today. In fact, I was also telling the guys in my mailing list that it's the only setup that I have today on my watch list. Most of the crosses that were trending today were Canadian dollar crosses, but we have the monetary policy report coming from Canada today, which has that usually hints the interest rates policy for the Bank of Canada in the near future. And whenever there is any news related to the interest rates, I usually like to not get involved in the market. Apart from the Canadian dollar crosses, like I say, which were banned from my watch list for today, I didn't quite find any interesting setup. So the only setup I could actually I would actually only tried was the Swiss franc. All the rest were not quite looking very appealing to me, quite frankly. Anyway, sorry for the rambling. Swiss franc, yeah. Like I was saying, we got the breakout of the 119 00 round number last month. This month we've retraced back to retest that level from below right there, and from there it seems like we are beginning to retrace or to continue actually to the downside. Okay. Well, moreover, we have the 50% Fibonacci level right there, okay, and also we have the dynamic area of resistance, and of course the previous triple bottom low, which was this level, okay, and now working as resistance. All right. Anyway, zooming into the 4 hours time frame. I've been following this setup for a long time, for weeks actually. First of all, I was waiting for a breakout of this first retracement trend line, which got me short on the market right there. I scored a loss there last week. Now we have effectively a new retracement trend line, which gave way. A price meandered sideways, okay, as you can see here, meander sideways in some sort of flat bottom triangle, okay. This is a flat bottom triangle marked in blue in my screen, okay, with multiple bar lows at this level, which is the 117.80 level, and then we have the leaning trend line, okay, meaning the triangle top. That level got broken there, which actually that breakout happened today, and moreover, if we zoom into the short time frames, it got broken, pulled back, and continuation. Actually, let me show you the on the 1 hour time frame the breakout, pullback, continuation pattern. Okay, you see this? This is the bottom of the actual flat bottom triangle bottom. Yeah, and well, we got the breakout here. It got retested from below, and the actual trigger should have come here at 117.60. But as you know, I like to set my entries and exits around round numbers, because it is my belief that they do work as levels of support and resistance from a psychological point of view, at least. And so like I said, the entry should have been triggered here at 117.60, but we had the round number, well, 10 pips below, of course, the 117.50 level, and I decided to stretch out a little bit my entry down to 117.45. you know, just a little bit for just for a little bit of safety. Okay, it's just a routine of mine. For example, if you have a look here, okay, this is the 118 round number, and here again, well, you know, here we have the 118.50. Okay, it is my experience that from an intraday point of view, prices do usually work or tend to react more often than not to the round numbers. Okay, so I like to you know, if my entry comes, I want to enter short, and the entry comes few pips above the round number, I usually like to wait it out a little bit, stretch my entry until the round number is breached. That's why I've stretched, like I say, 15 pips my entry. In fact, I've just gotten an email from one of the guys in my mailing list. You know, well, that's basically all right. Okay, folks, I'll keep you updated. Bye bye. Oh yeah, sorry, I forgot mentioning stop losses and targets. Stop loss up here at 117.83 above the breakout level. Okay, targets, let me zoom back out again. The targets usual, I will follow two stages exit strategy. Fast exit at the previous swing low, and then I will you know, I will shoot for the whole for the full potential projection. In theory, you never know whether this level will be reached or not, which is this level, the 114.00 round number. Okay, basically measuring this whole swing and adding it to the tip of the retracement takes us all the way to 114.00. And now, of course, I will exit few pips above that level. Alright guys, that's all for today. This is a long-term trade. It's basically a trade that's taken off the daily time frame. Okay, it's gonna take a little bit of time to it's gonna take probably days, well, days for sure, but perhaps some weeks. Okay, so you know, don't expect these the updates to come out in the near future. Okay, like I said, it's gonna take a little bit of time. Alright folks, that's all. Bye bye. Hi guys, this is Sector again. Just one quick update to let you know that I've upped my stop loss from here up to here in order to get a little bit of protection from the 118.00 round number. Okay, also I see that well, we've had a few bar lows down there. Okay, at that level at 118.04 sorry, 118.00. So I thought perhaps I could, you know, use all those you know, all those elements in order to protect my stop loss a little bit farther. Right, so like I say, new stop, my stop loss has been up to 118.05. Alright guys, I'll keep you updated. Bye bye. Hi guys, this is Sector. Another quick update. It's actually been 3 days since the last update. Today is Monday, the 22nd of October. Like I say, just a quick update on the trade that I opened last Thursday on the USD against the Swiss franc off the daily time frame. Just to let you know that half of my position has been exited for 116 pips. And the second half of the trade, of course, is still open. It's aiming for the 114.00 round number. That's basically it. I'll keep you up. Oh yeah, the trail stop has been trailed. The stop loss has been trailed from here down to entry level. So right now it's effectively sitting at break even. All right. Well, okay, guys, that's basically all. I'll keep you updated. Bye bye. Hi guys, this is Hector. Another update, final update actually. I've been stopped out at break even right there for the second half of the trade. What can I say? We've been a massive spike or retracement to the upside on the Swissy. Actually, the dollar has been gaining strength, or the euro has been euro weakening and Swiss franc weakening as well across the board. Right, nonetheless, what can I say? At least I got some nice profits on the first half of the trade. Alright folks, that's all for this trade. Bye bye.